You know, it's quite interesting, Level, that we just had a chat with one of our clients, man. And the thing is, we all see property different, guys. And it's very important for us to really understand what are the pros, especially the cons. This is what some of you guys really appreciate about us, is that we tell you as is, right? So there's no filtering, because one of our friends was like, close friends, is like, guys, what about crypto? How can we start investing in crypto? I was like, personally, I do not invest in something that I don't understand. And as beginners, I feel as if that's where a lot of us get it wrong, is that a lot of us flock to certain investments because it's the it thing right now. Whereas this person doesn't even understand how money is made there. And I personally feel as if I'm investing in something, I don't understand how money is made. Number two, which is most important, I do not understand how money is lost. Personally, I will not invest. Remember, one of two very close guys that pitched something to us. I was really excited about it, but I didn't understand how will I lose money.
Yeah.
So what would you say, especially as a beginner level, looking at, this is our favorite topic, property. But then now, especially in terms of looking at it from the mindset perspective, with risk and opportunity, what does that offer to the next person?
Yeah, I think from my side, the most important thing, this is now investments, right?
Yeah.
The most important thing is to understand that what type of investment are you going in, what the pros and cons are of that particular investment. Is there a chance for you to lose your money? Right? Because now a lot of us tend to think that because this particular investment, it's risk-free, and then it's going to be high reward, of which, if you have been involved in investments, you know that the higher the risk, the higher reward. There's no ways that you're going to be getting your 100% interest. But now when you're looking at the risk is low. So the thing about me is that whenever someone pitches something that is about investment, right, I need to understand both sides. How can I lose the money, and how do we actually win the money? I need to understand, you need to make me understand, how do I actually go around that particular investment, of which, for us, that is our strength on property investment, man. Whenever you come through to property investing, we are able to actually tell you that what is the pros and cons, how can you actually lose money, and how can you actually win money.
Guys, let's have a conversation, right? I'd like to understand from you guys, when you're looking at property as an investment, do you think that it's high reward or less reward? I'd just like to understand down in the comment section, right? Do you guys think that when investing in property, is it high reward or low? No, yeah, bro. When it comes to you, man, when you went in there, what were your thoughts, bro? When you were starting to invest, did you think, bro, it was high or low?
In property?
Yeah.
I mean, because I did business studies, right? And everybody that did business studies will attest to this.
Yeah.
There's a part where you talk about investments, right?
Yeah.
And you understand that when you're looking at investments,
sure,
the greater the risk, the more rewards that you're going to be getting.
Yeah.
The lower the reward, the lower the risk that you're going to be actually getting. Man, even if you go to your banks, you can see that the more risk there is, like if you're saying that you wanted to invest in shares, the higher the risk. That's what the banker should actually be telling you. So on my side, when I was looking at property investing, man, I knew that there is a chance for me to lose, but now I also understood that the gains would actually be better, right? Because now I'm looking at it from a perspective that if I'm going to be losing 10,000 on one deal, on the next deal, at least I should be doing times 5 of that. Now the problem is that if I'm losing 10,000 this time, and then on my next deal I'm only gaining 5,000, then that isn't really such a good idea.
Sure. For me, bro, you know, especially when I started my journey, right? I mean, you all hear that you can't go wrong with property.
Yeah.
In my mindset, I thought that it's low risk. When I'm investing directly in terms of buying the property, renting it out or flipping.
Yeah.
I thought that it's low risk.
With the property?
With property.
Okay.
Because to me, it was that thing of, we've all heard it, you can't go wrong with property.
Yeah.
Until I then realized that you need to really understand what do you want. And when I'm saying what do you want, I'm saying that we all have different objectives. or what do we want from property. So now once you understand what do you want from property, now you're able to then align that with a specific strategy again. Or does this strategy make sense in terms of getting me to where I want it to be? So for instance, if someone is saying that they want capital gains, let's say it's 500,000 in the next 5 years, versus someone who's saying that they want to increase their cash flow in a sense whereby, let's just say that they're about to retire. Now with them retiring, they want to position themselves in a way whereby their portfolio, they're buying the type of properties that will enable them to retire. So ultimately those two people are using different strategies.
Yeah.
And the thing about it is that I remember when we had this conversation is that now with that being said, there's a high possibility that yes, you might like a specific strategy, but you find out that that strategy won't take you to that desired outcome that you want. So ultimately now is that you can find yourself in a situation whereby using a specific strategy as a property investor, but you didn't like it. Let me give you a classic example, right? If one is saying that they want to raise 500,000 within 5 years, right? But now they're having an apartment that they are renting out. The question is, let's just say that it was even Kapond. Now, how will you practically get to that 500,000? There's a high possibility that you won't. Not unless you're saying that you're looking at it from a perspective whereby appreciation, and once appreciation has happened, you will then sell the equity, and then that's how you'll get the 500,000. But my question to you again is that how sure are you will that property increase ka 500,000? Because again, we are not in control of a specific market.
Now, as we are talking, right?
Yeah.
I'm thinking of the risk to reward thing, right? And I've noticed that with any business that you're going to be going into, property investing is also a business. So I think we should actually be looking at property as another business, right? The more you equip yourself, remember we said that when it comes to your risk reward, right? The greater the risk, the more rewards that you're going to be getting, right? So now, the more what we found out is that the more you equip yourself, the less the risk becomes.
Yeah.
So if we're saying that risk is 100%, reward is equals to 100%. Now, the more I equip myself, the less my risk becomes. So it moves from the 100% to 80%. But now the reward part still stays the same because now we understand what we're going to be buying. So for example, if we are looking at one property and then we're both interested in buying that property, if Neo has done his due diligence, knows where he's going to be buying the property, at what price he's going to be buying the property, and understands the market, right? The better equipped he is to be buying that particular property. Because now for me, I would just be thinking that, no, let me just buy a property because you can never go wrong with property. However, if Neo's buying that property, he knows exactly what he's doing. Yeah. So man, today we're going to be talking about the beginner tips that every property investor, every beginner property investor should be taking into consideration before they jump in. Now, let's go.
Number one, I spoke very importantly about understanding what is your ultimate goal so that you marry it with a strategy. And now, as I did mention, as beginners, we need to be careful of something, that these two might not align. You might be forced into a strategy that, yes, you've liked renting out an apartment. But now when you're looking at the practicality of you renting out that apartment to get to that desired goal, it doesn't make sense. Because let's look at it again. Remember, even with all beginners, we are all in different stages. Let's look at it from a perspective whereby I retired. So now I've got capital gains. And now let's just say that with that capital gains, let's just say that you retired, you got your payout, right? So now you've got 1.2 million. And now the thing is, yes, you've got the 1.2 million. Now what do you do with it? So you need to remember that whatever investment again or strategy that you will be doing, the outcomes are then different. So if I will be buying that single apartment, let's say I'm buying that single apartment, got 1.2 cash, right? Now the real question is that, do I still want to buy other properties? Because now we find ourselves in a situation whereby, I've seen this a lot of times, whereby somebody came through to us and said that, gents, I bought this property cash and now I want to buy the next one. But you're forgetting something, that you need to be well aware that if you retired, now there's no more pay slip. And yes, there is that 1.2 million. So I need to be very careful in terms of the type of properties that I'm buying, because if yes, I did retire, I got the 1.2 million, I bought it cash. But now people are forgetting something. What about their lifestyle? So now you're looking at your lifestyle, and let's just say that your total expenses are about 10,000. You need to take that into consideration again, because now once your lifestyle is also part of your business, then now you find it difficult to grow, because your personal expenses are now the business's expenses. So I've seen this whereby, yes, someone did get that payout, but because of the planning wasn't done correctly, they're finding themselves in that situation whereby my personal expenses are onto the business, and now I'm finding it difficult to grow. So we all looking at property different, because now it's way different from someone who's, let's say, they're 25 years old. They just completed the internship, they got that permanent position. So now they're looking at it in a sense whereby let's just say that I can still live at home. And you find out that my expenses are not so much. So we need to be very careful when it comes to marrying our goals with our strategy.
Now, when you're talking about goals and strategy, man, this is one of the most underrated things, because we hear about property investing, or I see Neo and Lemu going on the roof saying that, no, we are flipping properties. And I fall in love with that strategy because I've seen someone doing that. However, that is not the best strategy for you at that particular moment. Maybe for you, rental could be something that you should actually be thinking on or considering about, right?
Yeah.
So for me, I think before anybody takes out money from their pocket, they need to understand that, why am I investing in property? What's my goal? What's my long-term goal? Is my long-term goal capital gains, or is my long-term game rental, growing my cash flow? Then if it is cash flow, I remember there is also now that strategy of Airbnb. Now, understanding that, okay, there is Airbnb, but now if I do go into Airbnb, how do I then scale to the next property, right? Now, the banks, when they look at me, when they ask for that proof of payment or proof of funds, how you receive the funds, now will I be able to actually show them that this is how I'm actually getting, using that Airbnb strategy? Now, if you can't, or if the bank doesn't accept Airbnb as income from your business, or you have to wait for 5 years, then you need to consider that, okay, if I go the rental route and I can show them my proof that I do actually have tenants that are paying me on a monthly basis and they're on 1-year contracts, now that is different. So I think this is something that a lot of people have to take into consideration before they go into a strategy. Understand where you are and how can you actually go to the next level.
And what you said right there is quite profound, Leo, in terms of scrutinize the strategy itself that you want.
Yeah.
Don't just look at it from, I've seen on TikTok a lot of people posting about Airbnb. Also understand the risk that is involved in it. You just gave a good example there with that. What happens if, let's say that you bought your Airbnb right now, let's say you bought that apartment right now, you took credit or whatever, and then you filled it up. Then you find out that in the next 3 months, that you find out that you were taking money from your pocket. I know someone who's in Airbnb and they took out money from their pocket. Now, already if you're taking out money from your personal account, what's happening there is that your expenses is more than your income. Look at it from an affordability perspective. If you are in that situation, what does it mean from the bank? It's not a situation whereby, yes, this person is earned, let's say 40K for the past 3 months, and their expenses was 30K for that past 3 months each month. It's a situation whereby, yes, your expenses was 30K, but because it was a bad month, you find out that your income was 20K. So therefore, that other 10K, so now that has a direct impact towards your affordability. So strategy, again, with whatever strategy that you're doing, hence that's what we are really bashing, is that you need to understand what is the risk that's involved with it.
Yeah.
Yeah.
Now, the second point that I would like to talk about, right, is your team, right? And now I understand we're all speaking about teams, but now understanding when you need your team and what the team does for you is really important. Now, your team, it's either they're going to be saving you money or making you money. If your team member is not doing any one of these two, or the person that you've employed or the person that you're going to be paying, they're not doing one of these two, then chances are you don't need them on your team. So your team, it's either they're going to be saving you money or they're going to be making you money, right? Estate agents are part of our team because they sell properties for us, which means that they are the ones that are bringing in the money, right? Now, when you're looking at someone that you're also paying, it's your accountant. Your accountant is saving you money. And now you ask yourself that, how is my accountant saving me money? Now, if say for instance, your tax bill comes back and it says that you need to pay 100,000 on taxes, right? And your accountant is able to come back, do your files, look at your incomes and your expenses, and then at the end of the day say that you are needing to pay, let's say 40,000. Now they have saved you 60,000 of your bill. Now, in that case, we understand that accountants are there to actually save us money. Now, understanding the two or the difference between the two puts more ease into your mind. Because I remember as a beginner property investor, or when I started in business, I was always asking myself that, but why do I have to pay the accountant?
Yeah, but we didn't.
Let me do it myself. Right? Let me do it myself. Let me just go register on e-filing and then do it myself. I'm not a registered accountant. I do not know anything about accountants. I just put in my things there, and then at the end of the month or at the end of the financial year, it says that I need to pay 100,000. I'm happy that I didn't give my accountant 10,000.
But at what cost?
But at what cost? Because now my bill moved from 100,000 to 40,000, and now I'm paying 10,000 to my accountant. That's 50,000. That's my cost. Now, if I'm saying that I'm going to be doing it alone, it actually costs me 100,000. Now, this is something that a lot of business owners, even property investors, fall in the trap, right? Thinking that, no, I can just do it myself and then save on that money. Paint. You say that, no, I'll do the painting for myself. You get there, you paint, only to find out that now you haven't done the correct painting. The walls still look bad. Now the question is that how much did you actually save? Because at the end of the day, you need to come back and pay someone to actually pay to paint correctly. So what I'm basically saying is that never compromise when you're getting a team. You need a team. You need a contractor, number one. You need someone that is an attorney. You need an estate agent. Now with the estate agent, it differs, right? Because remember, estate agents, most of the time, they look at a specific market. So you find out that this estate agent is operating in Johannesburg South. Now, if they are only operating in Johannesburg South, and then you take them to Johannesburg North, they might sell a property, but you are more likely to sell a property faster with someone that is specialist in Johannesburg North. Because with Johannesburg North, that person has, let's say, 10 listings. And on their 10 listings, how many inquiries do they get a day? Let's say they get 2 inquiries a day, which means that with the 10 listings, they're getting 20 inquiries every day. Now, compared to someone that only has 1 property in that market, if I only have 1 property in that market, I'm only getting 1 inquiry a day. Now, if this person is able to also bring people to show them that, okay, this is the property that you inquired on, but we have this one that is newly renovated. How about you come look at this property? Then this actually brings more traffic to your property. Yes, you might have actually said that, no, if I sell it myself, I don't have to pay the agent, let's say 40,000 or 60,000, right? It's fine, you didn't pay that 60,000, but how long was the property on the market? If you were able to sell the property within less than 1 month, then good for you, right? But now, if the property is on the market for a year, how much did you lose in terms of bond? How much did you lose in terms of going into the next deal? So sometimes, let's let the professionals do their job and just take the back seat, find the deal, because that's what our speciality is. It's finding the deal, negotiating the deal, and then we are done.
Level, you mentioned something here, the accountant. Which was very important. And I remember even with us as beginners, we also had that mindset. And hence, I understand where beginners are, but we know, we walked that journey. That you want to save as much. You're not thinking about putting people in your payroll. You're like, why must I have an accountant? Why must I have a lawyer? Until you're in trouble. That's when you understand why you had to have an accountant.
Because you're going to call the same person that you're avoiding.
And we are forgetting.
And chances are, now they're going to say, oh, you've been doing it by yourself.
I remember when we got that account, and you know what the thing is, right? A lot of beginners, some of properties, that they don't do it intentionally, in the sense whereby, not unless, you'll see if you're on this live, on an excuse, you don't have an excuse. But most investors, as beginners, we're looking at it from a perspective whereby, but I'm not making a lot of money. Forgetting again that as soon as there's income,
you're making money.
I'm making money. Now, you find out it was worse even with us because we were flipping properties. Can you imagine, guys, you are doing the transactions whereby, let's say that you are buying property for 400,000 and then you are selling it for 800,000, right? Let me give you this classic example to show you guys how beginners actually will fall into this trap. I'm buying the property for 400,000, right? And I'm looking at it from selling it from 800,000. Right? Now, if I'm doing it under my personal capacity, that's why even with these things again, forms of ownership have a direct impact towards your business.
Yeah.
How money is coming into my account versus my business account versus my trust account. Beginners need to know these things. You are taxed differently according to that, guys. As soon as you did open, you heard someone talking about a trust account. Let's say that you did hear us talking about a trust account. You went to go because we were speaking about protecting assets, right? From marriage. And then now all of a sudden, when I'm saying protecting from marriage, I'm not saying from divorce. I'm saying that if I am to go down, I don't want my spouse to be affected. I already know some people are like, he wants to exit.
Yeah, he wants to fire it from the spouse.
Ladies, I want to address, just for 2 minutes and then I'll go back. I want to address you on this one, guys. Is that I've had so many chats with the guys. I'm guessing let's also include the guys, right?
Yeah.
I've had so many chats, whereas a lot of us think that when someone doesn't want to get married in community of property, right? You guys, so I'm not saying ladies only, I'm also including the gents, right?
Yeah, because even the gents
are like that. So a lot of people are looking at it from a perspective whereby, exit. You already want to go out. But you're forgetting something, that as a property investor, the more I'm actually growing is the more debt I'm having, right? Now look at it this way. Let's just say that it was community, and then I had 5 properties and they're owing. And then you find out that let's just say that my business went underwater. Now all of those 5 properties or my debt is going to have a direct impact towards you. And imagine if you were that person who was looking at ClearScore every month. Oh, it's good. Oh, it's well. But no, everything is good. It's going to have a direct impact towards you. So we need to actually understand estate planning, number one, that when it comes to us having this chat whereby someone is saying that, how about we open a trust? Or how about we look at the different forms of relationship? And we should rather respond not from a perspective of, I'm responding because I think that you want exit, but rather in a sense whereby understanding the dynamics, because the more we are growing is the more debt we are accumulating. The debt that I had last year versus the debt that I have this year, it's different. So you might find out, and I know that for sure, even as an investor, that 5 years from now, I'm going to be heavily in debt. But then again, it's that thing here, the good debt versus the bad debt. So because I know that whatever property that I'm buying, I already know that the ROI is good. But now I'm protecting now my partner in a sense whereby I do not want, if anything does happen, as much as we did our due diligence, we ran the ROI, but now if anything does happen towards this, it is not going to affect you.